Welcome accounting boffins, you with Ashraf Patel and the crew guys. And remember, we're looking at questions on fixed assets. Let's do a quick recap on what is it that you need to know regarding your fixed assets. Remember we said the most important thing to remember is that you have calculations to complete with regards to depreciation, and then with regards to depreciation you have the cost price method and you also have the book value or the carrying value method of depreciation. So clearly you can see your two different methods of depreciation are very, very important when it comes to your fixed assets. Right, and then remember we also said that your asset disposal account is an interim nominal account that you open up to serve a particular purpose once you've achieved that particular objective. In other words, you've calculated whether you've made a profit or a loss on sale of asset, then obviously you will notice that that account self-destructs, it actually closes off, and you either transfer a profit to the profit and sale of asset account or a loss to the loss on sale of asset account. Okay, now let's look at this information that we have here. It says here, Amalinda Limited. The following information appears in the accounting records of Amalinda Limited for the financial year ended 29th of February 2020. Okay, what is it that we have? We are asked to complete the note, which is your tangible assets note, and you will notice that they are giving you additional information. In other words, they're telling you, take the following information into account in order to complete that particular note. So, what do we know? On the 1st of April 2019, the business acquired a mortgage bond of 2,500,000 to purchase the new buildings. So immediately you go into your note and you realize that this is the situation here. What had happened was you had actually purchased land and buildings to the tune of 2,500,000. Clearly you can see it's an addition. In other words, you had absolutely no land and buildings at the beginning of the year. During the year, you purchased additional land and buildings to the value of 2,500,000, and as a result, that is now your closing balance at the end of the year. Also, we remember that land and buildings does not have any accumulated depreciation to it. Land and buildings do not depreciate in value, rather they appreciate in value. Okay, so that's your land and buildings now that we've sorted out. Let's go on to the next one, which is our vehicles. They're telling you that in terms of the additional information, okay, that one we've done. December, additional equipment was bought. We'll come back to that one there. Let's just keep it aside. And that's the method of depreciation for your equipment. Okay, now let's look at the equipment. Let's in fact do the equipment. We're saying here on the 31st of December 2019, additional equipment was bought. Clearly you can see, if you look at your equipment at the beginning of the year, had an opening balance of 375,500, and at the end of the year has an opening balance of 400,300. So immediately what you're going to do now is we're going to do this here. Let's take this into account and we say 400,300, which is my closing balance, minus my opening balance of 375,500, and you will notice you get a figure of 24,800. Immediately you know now, you can go in and slot in that figure of 24,800. Here we go. That's the land and buildings. Oh, sorry, that's the equipment that we have purchased. The land and buildings, we've indicated that figure there already. Okay, now, another question of importance. Why did I do a straightforward comparison in my equipment from my opening to my closing balance? Because clearly you could see, and you can still see, that there were no disposals. Can you see that? Let's just do this here so we can clearly see it. there are no disposals. So therefore, you could compare your opening balance with your closing balance and then determine that you had purchased additional equipment to the value of 24,800. Remember, you can only do that if there is no disposal. Right, next step. What are we expected to now do? We are expected to calculate the depreciation on the equipment. What do we know about this? We're told here that depreciation on equipment is calculated at 20% per annum on the carrying value. Okay, so immediately I say fine. Let me go in and do my depreciation calculation. So obviously what I'm going to do here is I'm going to work on the old first, right? And taking my information, it's 375,500. Here we go, 375,500 minus the accumulated depreciation. And what was my accumulated depreciation? 141,500 minus 141,500. Okay, let's do that calculation there. So here we go. We say 375,500 minus 141,500 will give me a figure of 234,000. Right. So 234,000 is now my carrying value. What do I need to do? I needed to calculate my depreciation on my equipment on 20% per annum on the carrying value. So I've got my carrying value, which was 234,000. Here we go, 234,000 times 20%. Remember, 20 over 100 times your time. You had this equipment for the entire year. Clearly, you can see we're using art once again, amount, rate, and time. And here we go. Let's do this. It's 234,000. We've got our figure there, times 20%. And this will be equal to 46,800. So 46,800 is the depreciation on my old equipment, right? Did I buy new equipment? Yes, I did. Let me have a look at that. The new equipment that was purchased, we said it was on the 1st of April, the business acquired, we got that. On the 31st of December 2019, additional equipment was bought. Right, so if I'm working December, clearly you can see that my year started in March, obviously, the beginning of the financial year. If I bought on the 1st of December, it's December, January, February, 3 months of this financial year. So only 3 months did we use the new equipment. Okay, we've already ascertained that we purchased equipment for 24,800. Therefore, let's look at this one here. We got our 24,800 was the value of the new equipment times the 20 over 100 times 3 over 12. Okay, now remember once again, the question is, why am I using the 24,800? Because the 24,800 was not subjected to any depreciation, it's new equipment. Therefore, you work on the 24,800. Okay, let's take the 24,800 now. 24,800 was the new equipment that we purchased, times 20%, which is my rate of depreciation, times 3, divide by 12, and that will give me a figure of 1,240. Okay, here we go. 1,240 will be my, let's just put it clearer, 1,240. Okay, this is now my depreciation on my new equipment. So therefore, what do? I take the 1,240 plus the 46,800, and that will give me 48,040 as my depreciation figure. Let's see where we have it. There we go, 48,040. Okay, so what have we done? I've shown you the actual calculation that we needed to do in terms of the equipment that we had, the old equipment, plus the new equipment that we had purchased, and therefore you can see that the total depreciation on equipment amounted to 48,040. And then we've actually done a calculation to prove it. So there we go. We now have our opening balance, which was the carrying value at the beginning of the year. Add your addition, right, minus your depreciation will give you your carrying value at the end of the year. Okay, we're now looking at vehicles. With regards to vehicles, we are told that, let's get the information with regards to the vehicles. There we go. On the 1st of November, 2019, one of the vehicles was sold on credit at a loss of 4,200. On the equipment is sorted. Vehicles are depreciated at 15% per annum on cost, and equipment is sorted. Okay, now look at the information that we have here. All that you are told is that the accumulated depreciation on your vehicles at the beginning of the year amounts to 450,000 Rand. Right. Remember, it was 4 vehicles, all of them identical. So step number 1, what do? We take the 450,000, which is my accumulated depreciation, divide that by 4 will give me 112,500 per vehicle. All right? Okay. Now that I have that, what would I do? I say, fine, take this into consideration now. If I take this here as 112,500, which was equal to 15%, 100% is equal to my unknown. Let's solve that equation there. Here we go. So what do we say? 112,500 times 100 divided by 15 will give me a value of 750,000. Voila, what do I have? I've got my cost price of my vehicles to be 750,000. So clearly you can see here, what did I have to do? I had to use my accumulated depreciation to determine my cost price. Okay, once I've done that, I now have a carrying value, obviously 750,000 minus the 450 will give me a carrying value of 300,000, right? And now I'm told with regards to the disposal, what am I told? I'm told here that the vehicle was sold. Let's get the information, right? Where we are. Here's it. It was sold on credit at a loss of 4,200. So clearly, you can see here that if you take this into consideration now, you will work out that if your vehicle cost you, what did we say? 750,000 divided by 4 will give you a cost of 187,500, right? And then we also say we take into consideration that the depreciation that we calculated was, if it was 450,000 for 4, let's work that one out. 450,000 for 4 divided by 4 will give you 112,500. Okay, so now we've got those two figures. We've got the, let's just write this figure down here. So we keep it aside, we're going to use it. It will be the 112,500, right? And then we take the cost price, which we said was 750,000 divided by 4, gave me a figure of 187,500 minus your 112,500. Clearly you can see it was 75,000, right? That was your carrying value. And then obviously your current year's depreciation had to be calculated. Okay, so now this means therefore, if you look at your vehicles figure, let's fit in all the figures that we have. Okay, there we go. Now, if you looked at your 56,250, that would be your disposal at your carrying value. Okay? Now, once again, what is important is when you are doing this calculation, make sure that you have your cost price minus your accumulated depreciation, which is equal to your carrying value, right? And then we say what? When was this vehicle sold? This vehicle that we sold, let's get the information. On the 1st of November, one of the vehicles was sold on credit at a loss of 4,200. So remember, your table that you draw up for asset disposal, when you are drawing up this table, you're starting with you are given the loss. So therefore, when you are doing this here, keep this in mind. Keep this in mind. You got your depreciation, you got your cost price, your accumulated depreciation, your carrying value, your selling price, and your profit or your loss. So we've already got some of these figures. Remember, we worked them out. However, what is important to remember is that in this case here, they are not giving you your selling price. They are giving you the loss figure. So using the loss figure, which was 4,200, let's just verify that figure. Here we go. There's it. 4,200 was my loss. So in my table now, what is very important is that you have a loss of 4,200. So you work backwards to determine your carrying value, because we know that in note number 3, we always say disposals at carrying value. Please note, in note number 3, there we go. It's disposals at carrying value. That's how we get to the figure of 56,250. Remember what you have to do? You have to complete the table, right? You've already slotted in the cost price. You've slotted in the accumulated depreciation. You put in the current year's depreciation. Once you have all of that, you now determine the carrying value, and that's the figure that you're going to use in your note number 3 for disposals at carrying value. This then gives you the completed note number 3. As you can see, this figure was pre-populated for you. Obviously, you've done the land and buildings, you've done the equipment, and you've worked out the vehicles. The most important thing to remember in this particular question, the challenge was to determine that cost price of that vehicle. Because remember, you were given the accumulated depreciation. And as you can remember, we worked backwards to determine the cost price. So please, guys, important, when you're working with asset disposal, understand that in sometimes, depending on the information that's given to you, you are then expected to work out the missing figures. Okay? Let's take a quick break, and we'll see you just now. Welcome back, accounting boffins. Remember, guys, we're doing asset disposal. Once again, a very, very important consideration whenever you are dealing with an asset disposal. It is imperative that you draw up the table. What am I referring to? I'm referring to the table where we calculate our depreciation for our financial year, right? That's the current depreciation, remember? Then you bring in your cost price, your accumulated depreciation. Always remember, it's the beginning of the year figure, right? Plus, add your current pro rata depreciation. That will then give you your carrying value. You then have your selling price, and then you have your profit or loss on sale of asset. So once this table is completed, immediately you know you've got the figures that you need in order to complete either note number 3 or the asset disposal account or whatever is required of you. Okay, let's go right into this question here where we are asked to complete the fixed assets note, and the first one that we can see is we have a missing figure here for the carrying value at the beginning of the financial year for our vehicles. Right, how do we calculate the carrying value? Always remember, cost price minus accumulated depreciation. Let's do that. So here we go. Here's our cost price, 838,000, and we have our accumulated depreciation of 420,000. There's my accumulated depreciation, 420,000. Obviously, if you do the maths, you can see that you have a carrying value at the beginning of the year of 418,000. So once again, important guys, cost price minus accumulated depreciation to give me my carrying value. Okay. The next thing that we needed to calculate there you see we've slotted in your carrying value at the beginning of the year. Okay. Now we are expected to work out our depreciation. Right. Always keep your calculations for depreciations separate. Old and new. Starting with the old. Cost price was 838,000. We've dealt with that figure already. We've seen it. It was my balance at the beginning of the year. And what was my rate of depreciation? Let's just check my rate of depreciation for vehicles. Vehicles are depreciated at 15% per annum on cost. Therefore, what we do here is we say, fine, take your 838,000, which is your cost price, times your rate of depreciation. Remember, we always use art. And because we've used this for the entire year, it's old vehicles, immediately we do that calculation and we find that we have a figure here of 838,000 times the 15%, which will give me, let's do that, times the 15%, which will give me a figure of, nope, definitely something wrong there. Let's redo our calculation. 838,000 times the 15%, okay, and there we go, will give you a figure of 125,700. So that figure was in fact correct. There we go, 125,700. So what have we done? We've calculated our depreciation on the old vehicles. Right. Did we acquire a new vehicle? Let's check. Okay, guys, let's look at the new vehicle that we've purchased. We said, in terms of our information, did we purchase a new vehicle? Yes, we did. How much? 216,000. Okay, now the calculation. In terms of my new vehicle, there we go. A new vehicle was purchased on the 1st of October 2019. Right. Okay, in terms of my calculation, here we go. 1st of October, there's my date. Clearly you can see I purchased for 216,000. Therefore, your amount is 216,000. Your rate, which is your R component, is 15%. And your time is 5 months because obviously it was bought on the 1st of October. So October, November, December, January, and February gave you 5 months. Therefore, the 5/12. Okay, let's do that calculation. Here we go. So we say 216,000 times the 15%, which is my rate of depreciation, times 5 divided by 12. And there we go. We get a figure of 13,500. 13,500 is my depreciation on my new vehicle. Now watch this. We've always insisted that you show your calculations so that in the event of you making a mistake, you can always get part marks. Here we go. There you see it. There's my calculation. There's the old, there's the new. And the total obviously would be my depreciation. Now I got the 13,500 plus 125,700, and this will then give me 139,200, and that's the figure that I'm looking for. Voila, there's my 139,200 in terms of my total depreciation for my vehicles, right? So, what have we seen that was pertinent for us here? Keep your calculations separate for old and new. Okay. Moving on with the question, the next thing that we have to determine here would be the disposal of my equipment. What information do I have? I'm told here that old equipment was sold on the 1st of January for 26,250. A profit of 4,250 was made on this sale. Okay. Now, clearly you can see that when you are working out based on the information that you have, your selling price was 26,250, right? And you are told that you made a profit of 4,250. So clearly, the 22,000 Rand would be your disposal at carrying value. What do we remember? We remember from this year that if my selling price is greater than my carrying value, then I've made a profit. Okay? So in this case here, if my selling price was 26,250 minus my X amount, which is my carrying value, to give me a profit of 4,250. Clearly you can see that your carrying value was 22,000, meaning that your selling price was greater than your carrying value, which resulted in a profit of 4,250. Now, in terms of my information that I have there, you can clearly see now that my disposal is at 22,000. Right. So this gave you, because remember what we said, in note number 3, what do you want for your disposal? You want your disposal at carrying value, meaning cost price minus the accumulated depreciation. Now, if you look at the information that we have here, let's look at how we completed our table with regards to our asset disposal. Number one, they're telling you that let's look at the information that we have here. If you look at equipment, right, watch, you have an opening balance of 622,000. There were no additions, so that means you did not purchase any equipment. Therefore, if you take the 622,000 as your opening balance, right, minus your balance at the end of the year, which is 517,000, which is given to you, you can clearly see it. There we go, 105,000 Rand. What is the 105,000 Rand? The 105,000 Rand will now be your cost price of the asset that you are disposing. Clearly you can see that, right? And how did I do that? By comparing my opening balance with my closing balance. Then, the accumulated depreciation. Now let's put in the information that we have here. We know that the carrying value was 22,000. So obviously, if we know that the carrying value was 22,000, sorry, we take the 105,000 minus the 22,000. Okay, let's just redo that. We got 105,000 minus the 22,000 to give me a figure of 83,000 Rand. What's the 83,000 Rand? That's your cumulated depreciation of 83,000 Rand. Okay, you also know, in terms of the information given to you, that the selling price of the asset was 26,250. That means you sold the asset for 26,250 in cash. Therefore, because your selling price is greater than your carrying value, you've made a profit on sale of asset of 4,250. Clear, guys? Okay, now, in terms of my note number 3, right? Here we go. We can see that if you were asked to calculate your accumulated depreciation for your vehicles at the end of the year. Let's firstly take this figure forward and see how we're going to do our calculations, right? So we start off with our 358,000, which is my carrying value at the beginning of the year, 358,000, there we go. I add my, there was no addition, so there's no figure to add. Let's remove that. Minus your disposal. So therefore, here we go. Let's just get back to our calculator. We got our 358,000 as our carrying value at the beginning of the year, right? Then we subtracted 22,000, which was my disposals at carrying value, minus my depreciation of 35,400, and clearly you can see that gives you a carrying value of 300,600. So there's your 300,600. Once again, what did we do? We took our carrying value at the beginning of the year. There was no additions, so there's nothing to add. You subtracted the carrying value or the disposals at carrying value. Let's put this here so that you remember that the disposals at carrying value, very important for note number 3. Right, so we subtracted our disposals at carrying value and we subtracted our depreciation, the total of 35,400, to give me a carrying value of 300,600. Okay, now let's just do this here and just see. If you take your 517,000 minus 300,600 will give you a figure of 216,400. Now, what is the 216,400? The 216,400 is the accumulated depreciation at the end of your financial year. Now notice what happens here. That if you work out, let's do this calculation here so we can see it. If you take your 517,000 minus 216,400 will give you a figure of 300,600. So if you're working upwards, that's the answer that you're going to get. And if you're working downwards, once again, let's do the calculation to verify the accuracy of our note here. You started off with a 358,000. There was no additions, minus the disposals at carrying value, minus the depreciation for the year, and that gave you a figure of, there's something we did wrong here. Let's just redo this calculation. 358,000, right? We said minus the 22,000 minus your 35,400, and that gave you a figure of 300,600. Clearly you can see that in this particular example, your fixed asset note has to work out, and the check is important to verify whether you actually have the correct figures. Now, obviously, you need to have this information, and although the question didn't ask for it, but what figures would you show in your income statement in terms of depreciation, in terms of your profit on sale of asset or loss on sale of asset? So therefore, when you are doing your income statement, remember what we're going to say. We're going to say that you have a profit on sale of asset of 4,250, right? Obviously, you know where that came from. That came from the profit on the disposal of the equipment. And then your depreciation. Remember, you had two components of depreciation. Let's go back and pick them up. You had the 139,200, which was your depreciation on your vehicles, and your depreciation on your equipment of 35,400. Therefore, in terms of my income statement or my statement of comprehensive income, there I go. Depreciation, there's the vehicles, there's the equipment. Add the two together and you're going to get your total depreciation that needs to appear in your statement of comprehensive income, also known as the income statement. So in other words, what is important is, depending on what the question asks for, you also need to know this, that when it comes to your income statement, you must show your profit on sale of asset under other incomes. If it's a loss on sale of asset, it needs to appear under operating expenses. Depreciation will always appear under my operating expenses because we know that depreciation is an imputed expense appearing under operating expenses. Okay, guys? let's take a quick break, let's refresh, and we'll see you just now. Thank you, James. Welcome back, Accounting Boffins. You're with Ashraf Patel. We're dealing with asset disposal, and this obviously has now become our favorite section. We're not scared of the section anymore because we know exactly how to go about dealing with an asset disposal. Remember, again, a recap, when you are dealing with asset disposal, important considerations. One, the method of depreciation. Are we using the cost price method, right, of depreciation, or are we using the diminishing balance method of depreciation? Remember the two methods of depreciation. Most important, no matter which method you are using, we always use art. What do we mean by art? By art we mean the amount of the calculation, the rate of depreciation, and thirdly, the time component. How many months are we calculating the depreciation for? And then finally, when it comes to the asset disposal itself, what do we take into consideration? We always remember, with asset disposal, what components would you be working with regards to asset disposal? You'll work out the current depreciation. That means for the current financial year, your cost price, your accumulated depreciation, your carrying value, your selling price, your profit or your loss on sale of asset. What else do we remember? That if my selling price is greater than my carrying value, I'm going to make a profit. If my selling price is less than my carrying value, I'm going to make a loss. And if my selling price is equal to my carrying value, obviously no profit or no loss. Right, let's look at the next question, an interesting question. It says here, consider the information provided. Explain whether or not Barry and Brenda should be concerned about any problem or aspect relating to each taxi. Focus on one major problem per taxi. Quote amounts to support your opinion and provide a valid solution to each problem. Okay, what do we have here? Let's look at taxi number 1, right? The name of the driver is James. The date purchased was the 1st of March 2012, clearly telling you that it is something that you need to take cognizance of. The date, watch, right? The cost price of the vehicle was 52,000. Its accumulated depreciation is 51,999 Rand. Again, look at the data that you have, and you can clearly see here that this is an old taxi. Well, how do we know that? Because the accumulated depreciation is already 51,999 Rand, meaning that it has a carrying value of 1 Rand. And you do remember how to do the calculation when you have an asset valued at, or an old asset where you have to arrive at a carrying value of 1 Rand. Okay. Amount of revenue brought in, kilometers covered, fuel and repair cost, and the fuel and repair cost per kilometer. Okay. Let's look at our possible challenges or problems. Number 1, this vehicle is certainly overused. Why do we make that statement? It's high kilometers in relation to the other taxis. Watch here. It's 120,000. Again, we're quoting figures based on the information. There's 120,000 in relation to 70,000 and 34,000. So clearly you can see that in relation to the others, it's definitely overused. Number 2, it's an old vehicle, it's fully depreciated. Again, the cost price 52,000. Accumulated depreciation, 51. Here we go. There we see, we mentioned that already in our introduction. So clearly we can see that it's definitely an old vehicle. Then it has high running cost, 6 Rand 10 per kilometer compared to 4 Rand 80 and 4 Rand 70. Again, looking at this here, 4 Rand 80 for taxi 2, 4 Rand 70 for taxi 3, 6 Rand 10 per kilometer. So obviously the cost per kilometer is much higher than the other two taxis. What action do we take? Number one, obviously you have to replace the vehicle. Number two, use it less often and identify why this vehicle accounts for the most kilometers. Clearly an indication to you that this vehicle is being overused. It's the oldest vehicle in our fleet, yet it covers the most number of kilometers, and obviously it's time to now replace that particular vehicle. Okay, that's taxi A done and dusted. Let's look at taxi B. If you look, sorry, taxi 2, not taxi B, this one was taxi 1, taxi 2. It was bought on the 1st of March 2018. Driver is Bongi. The cost price of the vehicle, accumulated depreciation, amount of revenue brought in was 288,000. Kilometers covered was 70,000, right? The fuel and repair cost was 336,000, and the fuel and repair cost per kilometer was 480. Okay, let's do a calculation here. If I take my revenue per for taxi 1, I'm going back to taxi 1, and I'm saying, what's my revenue per kilometer? What am I going to do? I take my revenue of 1,080,000, right? 1,080,000, if I got it right. 1,080,000 divided by the number of kilometers covered is 120,000, and this will give me a figure of 9 Rand. Let me put it down here, right? Let's do this for taxi 2. In taxi 2, we now have revenue of 288,000, 288,000 divided by number of kilometers covered was 70,000. And this gave me a revenue per kilometer of 4 Rand and 11 cents, okay? And what we're going to do here now is put this figure here, 4 Rand and 11 cents. Okay, that's taxi 2. While we're at it, let's do taxi 3. Taxi 3 has a revenue of 306,000 in total, divided by 34,000 kilometers that we've covered to give me a revenue again of 9 Rand. So therefore, you can see here, we've got a figure here of 9 Rand once again. Clearly a discrepancy, right? Taxi 1 and taxi 3, both of them have a revenue per kilometer of 9 Rand, whereas taxi 2 has a revenue per kilometer of 4 Rand and 11 cents. Okay, what is it that we are concerned about? Taxi 2, your revenue is too low. 4 Rand per kilometer in relation to 9 Rand per kilometer of the other taxis, right? So clearly something is not adding up. If the other two taxis are giving you a revenue per kilometer of 9 Rand, and we've established that, we've ascertained that from the figures given to us, whereas taxi 2, we're only getting a revenue of 4 Rand and 11 cents per kilometer. Surely there is a possibility of fraud, right? The drivers not passing on the revenue to us. Clearly, there's something that action needs to be taken. What action? Number one, do an internal audit. Remember, the idea of internal auditing is to ensure that all our control processes are in place and they are effective. That's important. Number two, there may be a possibility of a criminal investigation, right? Very often, candidates would say, fire the driver. It's not as easy as that. Obviously, you need to follow due process with regards to one, you have a disciplinary hearing and a possible dismissal. So in other words, you've got to give them a fair chance to present the case. It's possible there may not be fraud, but in this case, obviously, it's pointing towards fraud. So therefore, what happens is you first institute a disciplinary hearing, obviously, pending the outcome of the disciplinary hearing. If there was definitely fraud involved, then definitely you could have a possible dismissal. So with taxi 2, clearly we had a challenge. Right, let's go to taxi 3 now. With taxi 3, again, we've got the cost price, we've got the accumulated depreciation, amount of revenue brought in is 306,000. Clearly, this stands out very, very evident. What is it? Look at the number of kilometers that this taxi has covered in relation to the old one, 120,000. In relation to taxi B, 70,000. We've only covered 34,000 kilometers. Clearly a cause for concern. Right, so taxi 3, what's our challenge? Clearly it is underutilized, low kilometers. We've only covered 34,000 kilometers compared to the 70,000 and the 120,000. Again, your running costs are low, right? 470 per kilometer compared to 480 and 610. What action must be taken? So obviously, if this vehicle has the lowest running cost, that's the vehicle that we need to use the most, because obviously it's going to give us the greatest return. So therefore, this vehicle must be used more often. Identify why this vehicle is underutilized. It's a possibility that the driver may be a lazy person, or the driver may not be getting the orders for the relevant trips to be undertaken. So this means that the orders may not be passed on to the driver. It may not necessarily be a lazy driver. So in other words, what are we saying here? You can clearly see the question relates to fixed assets and the utilization of the fixed asset. So one is where we do a question based on the calculations, and this type of question is an interpretive type of question where you are given information and you have to identify areas of concern. Okay guys, so with regards to fixed assets, if we have to summarize it, what is it that you need to know? Number one, be able to calculate depreciation on both the cost price and the accumulated depreciation method, right? One you use the cost, the other you use the carrying value. How do we determine carrying value? Cost price minus accumulated depreciation will give me my carrying value. Number two, be able to do an asset disposal, the account, the table, or the note number 3. What are the 5 steps that we do? Current year's depreciation, the cost price, accumulated depreciation, your carrying value, and your selling price, which will then give you either a profit or loss on sale of asset. Make sure that you understand how to use note number 3, and therefore understand that note number 3 fits in to your balance sheet. But note number 3 is always a note that, like we mentioned when we just started asset disposal, it's a note that learners have a challenge with. But now, once we've explained it, I'm sure it's a piece of cake, chocolate cake. From me, Ashraf, and the team, we want you to practice on asset disposal and all questions related to fixed assets, because as you practice, you'll begin to enjoy it, and when you enjoy doing something, definitely you're going to ace it. You're going to be an accounting shining star. Until the next time, be good. Goodbye.